Welcome to this session. This is Professor Farhat, in which we would look at how to account for not-for-profit private organization when it comes to expenses. Easy. We're going to be using the accrual basis. And what is accrual basis? I would say accrual basis is the normal GAAP accounting, the GAAP accounting that you learned in college. It's not modified cash. It's not modified accrual. Simply put, it's accrual, the accounting that you learn in your basic financial accounting 101. And simply put, expenses are reported as decreases in net asset without donor restriction on the statement of activities. And expenses are listed at the statement of activities. Hopefully we know this because we looked in a separate recording about the statement of activities, which we also discussed the net asset without donor restriction, because net asset, which is in quote the equity section, is also listed part of the statement of activities. And expenses are reported without donor restriction, because if you remember, on the statement of activities we had two columns for expenses and for revenues, one with without donor restriction and one with donor restriction. There are no expenses reported with donor restriction, because if the expense is with donor restriction, then we don't expense them. That's the definition of it. It's not expensed yet. And this is what we will discuss in this session, how to report expenses, but specifically we're going to be focusing on the voluntary health and welfare organization, as well as we are illustrating these concepts. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course, such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So first, let's start by talking a little bit about voluntary health and welfare organization. They are not-for-profit private organization, but the thing is they focus specifically on health and welfare services, and they are funded by voluntary donation. Some of them are very large. And what you need to do is you need to break down your expenses. So you need to have more disclosure for these companies. These companies promote the well-being, prevent diseases, provide direct health and welfare services to those in need. So not-for-profit organizations such as the VHWO, the Voluntary Health and Welfare Organization, must categorize their expenses into functional classification. What are those functional classification? Either program classification, program classification and support classification. What's a major program classification? It's basically related to your service, related to what you provide. So if you provide health services for the needy, that's what you do. That's your core objective or mission. So any money, any expense incurred to provide the service, it goes under major program classification. However, support classification, those are expenses that help the organization accomplish its mission and typically include activities like fundraising as well as management and general operation. Now, when it comes to FASB, the Financial Accounting Standard Board, they permit those functional classification to be presented either directly on the main financial statement or disclosed in the notes. So whether you break down your expenses by program or by supporting activities, and this is an example of it, you could do it on the face of the financial statement or you can do it in the notes. So basically this is Global Wellness Initiative, reporting of expenses by nature and function. We have the program activities and we have the support and activities. Under program activities, what they do research, they provide information, they provide advocacy and public awareness. And this is the total expenses for each category: grants, employee costs, professional, supplies, telecommunication. For example, notice here supplies. They have supplies incurred in research, information, public awareness, and they also have supply in management and general, fundraising, and total, which is under support activities. Same thing for all the expenses. You have to break the expenses into those two categories. So the program activities is any expense that's incurred to promote the service, to serve the the clients, in quote, the clients of this not-for-profit. Supporting activities, they are broken down into two categories: fundraising, management, and general. Fundraising is any effort made, any expenses made to raise more money, fundraising. Management and general, what's management and general? Management and general include costs related to maintaining the organization visibility to potential donors through publicity and public relation activities, as well as expenses associated with running the organization, like budgeting, accounting, reporting, legal services, office management, purchasing, any cost that sustain and support the organization to run its operation. This is what we call management and general expenses, which are what? Under which category? They are listed under the functional expenses of supporting activities. Now, under program activities, you could have many types depending on what this not-for-profit, what type of service are they providing. Now, what we're going to do next is I'm going to go over a series of transactions, then show you how to report expenses as well as revenues, and we're going to close the account. So this is a comprehensive example. Don't worry, I'm going to look at each transaction separately, but this is what we're going to be going, and we're going to close the nominal account at the end. So let's go through the whole process. This is really neat because it's going to show you the full picture. Starting with a business donated rent-free office space to the organization, which would ordinarily cost the organization $60,000 annually. So someone donated an office space for the not-for-profit to operate. Usually, if they want to rent this, it's going to cost them $60,000. Well, do they need to rent an office space? Of course they do. They need to operate. That's why they accepted it. Therefore, they needed it. They need to pay for it. So is there a journal entry for this? Yes, this is providing something for free. It's a donated rent-free office, basically donated service. Well, we're going to debit an expense, rent expense, credit contributions without donor restriction. Why without donor restriction? Because we're going to be using this space. Therefore, there's no donor restriction. So this is contributing services or contributing something other than cash or something other than physical asset, in a sense that you can take the asset. Rental is, do we need it? Yes. Do we need to pay for it? Yes. Is it of a specialized nature? Yes. If you want to rent, not anyone can provide rent for you. Therefore, we debit an expense and we credit a revenue. And we talked about these contributing services in the prior session. Let's take a look at the second transaction. Cash contribution of $96,000 were received alongside pledges of $73,000 due within the next year from a fundraising event. Well, we received cash with pledges of $73,000. We debit cash, obviously, for the 96. We debit contribution receivable less than a year. We don't have to do any discounting. And we're going to have contribution without any donor restriction, $96,000. And we're going to have contribution with donor restriction. What's the donor restriction here? Within the next year. There's a time frame. We have to wait for this money. With donor restriction, the donor restriction is the time. Let's take a look at the third transaction. Salaries and fringe benefits paid during the year amounted to $136. At year end, $9,300 of salaries were accrued. Well, the total expense, if we paid $136,600 and an additional $9,300 were accrued, how much is the total salaries, wages, and fringe benefits? $145,900. That's the total expense. Now, we paid in cash $136,600. We credit cash, and we credit salaries and benefits payable, which is the accrual amount, $9,300. This should be pretty straightforward for you. This is Accounting 101, paying salaries and accruing a portion of it. A donor pledged $240,000 for the construction of a new building payable over 6 fiscal years, commencing in 20X5. The discounted value of the pledge is $212,880. Now, we gave you the discounted value because it's longer than a year. We don't want you to worry about finding the present value. The present value is that much. We're going to debit, which is $212,880. We're going to debit the receivable, $240,000. We're going to credit the revenue is $212,880, which is what? Which is the discounted amount. And we're going to credit discount on contribution receivable, $27,120, which is the difference to account for the time value of money. Again, this is basic accounting 101. Let's take a look at this transaction. Office equipment was purchased for $30,000. The useful life of the equipment is estimated to be 6 years. Office furniture with a fair value of $14,000 was donated by a local office supply. The furniture has an estimated useful life of 7 years. So we purchased some equipment and some was donated. Well, great. 30 plus 14 is 44,000. We debit equipment and furniture. We paid 30,000 for this of this amount, and the remainder was contribution because we're going to be using them without donor restriction. Again, here we're contributing an asset. It's fair value 14,000. We record it at fair value and it's without donor restriction. A state government grant of 120,000 was received for program operation costs related to the public health education. Debit cash, credit, contribution with donor restriction. The program, it's program restricted, 120,000. Let's take a look at this transaction. Utilities expense for the year was 13,800. Printing and postage expense 15,700. Telephone expense 7,100. Supplies expense 3,950. At year end, an immaterial amount remained, and the balance in the accounts payable was 4,250. Now we need to record these transactions, record those expenses, and record the payable. We debit utilities expense, postage expense, printing and postage, telephone expense, supplies expense. We paid 36,300, and the remainder was on account 4,250 because it says here, and the balance in accounts payable 4,250. Now the supplies was immaterial, therefore we did not even account for it. We expensed the whole thing. Volunteers contributed $20,000 of time to help with answering phones, mailing material, and other various clerical activities. So here we received a service, time. Someone help us with answering the phone, mailing material. The question is, do we need this service? Yes, we need it. There's a good chance that we need it. Is it of a specialized nature? And the answer is no. We don't need anyone, a specialized person to answer the phone or mail the material. Well, yes, there's a good chance we might have to pay for it, but someone volunteer and it's not of specialized nature, there's no expense. Now again, here we are receiving services. If you don't know the rules, please look at the prior recording. No specialized skill is required. Although it's worth 20,000, we don't have to record this. It's estimated. If it was, then we will debit an expense credit revenue. And we talked about this in the prior recording. You can review it if you're not sure how to account for these contribution of services, because it's something you need to know. It is estimated that 80% of the pledges made during X5 will be collected. If 80% collected, it means 20 uncollected. Depreciation expense is recorded for the full year on the asset purchased earlier. So first, let's start with the pledge that's will be collected. We have a 73,000 worth of pledges times 20%. That's the amount that's collected. Same thing as in accounting provision for uncollectible pledges, 14,600, and we credit an allowance unrestricted 14,600. For depreciation expense, we're going to have a total of 7,000. We purchase a piece of equipment that's depreciated over 6 years, and which is 5,000 per year, and piece of furniture that's depreciated over 7 years. If you're looking where these numbers are coming from, when we purchase and when the furniture was donated, we were giving the time. Now remember, depreciation, just like accrual depreciation, you debit depreciation expense, credit accumulated depreciation. Here we are using the straight line. We could use any method, just like in private accounting, we could use any method. Not-for-profit organization, private not-for-profit, they use accrual accounting. So this is what you need to remember as I'm doing this. Transaction 10, all expenses were allocated to program services and support in the following percentages: public health education 40%, community service 30%, management and general 20%, and fundraising 10%. So at the end of the year, what we have to do, we have to take a look at our expenses, and we are going to allocate them to either major program or support program. Well, here are the percentages for each program. So what's going to happen is this. We're going to take a look at all our expenses. Let me show you the total. The total is $268.50. So all our expenses are $268.50. 268.50. This is all the expenses that we recorded thus far. And those expenses will be allocated according to the percentages. Public health program, 40%. We multiply this by 40%. And if the math is right, let me just double check my math to make sure everything matches. 268.050 times 0.4, and that's going to give us 107,200. And this is going to be debit public health education program. Then the same thing, will take 268.50 multiplied by 30%, community service program. Those are the major service program. Then for the support, we have management and fundraising, 53,610, 26,805. And if you want to see the functional allocation of natural expenses to function, there we go. We have the program on one side and we have the support on the other side. So notice salaries, some of the salaries went to public health education, some to the community service, some to the management in general, and some to fundraising. Same thing with rent expense, we allocated separately. Net assets were released to reflect the satisfaction of a state grant requirement that the grant resources to be used for public health education program purposes. Let me go back and show you one of the transactions that we worked in this session. And one of the transactions that we did was that the state gave us $120,000 for public health education, $120. We debited cash, we credited contribution with donor restriction program, $120,000. At this time, part of that amount is released from restriction. It satisfied the restriction requirement. Therefore, it's going to be moved from the with restriction, with donor restriction, to without donor restriction. So we're going to remember on the statement of activities, we have without and with donor restriction. What's happening is part of this amount is being moved from with donor restriction to without donor restriction. They're both revenues. So what's happening here, we are reducing a revenue, net asset released, satisfaction of purpose restriction with donor restriction, 107,220,000, and we are increasing net asset released, satisfaction of purpose restriction with donor restriction, 107,220. Now both of these accounts we are going to close. So what's happening here, revenue going restriction to without restriction, going from restriction to without restriction. Now I want to show you this. I believe it's very beneficial to show you this on the statement of activities. So let me show you this because it's very important that you see this. So this is statement of activities, which we looked at in a prior session. We looked at it in depth, but I want to show you what's happening here. Notice the 107,220. It's being deducted from the with donor restriction column and being moved to without donor restriction column. Then I want to show you one more thing. Once it's released, it get expensed immediately. So I kept these numbers the same. I kept public health education only, 107,220, for a purpose. And the purpose is to show you that it went from with donor restriction to without to being expensed. And this is a reminder, which we'll talk about also again shortly, that there are no expenses under with donor restriction. If the donor gave us the money and restricted that money, and we are not using it, there's no expenses. And we will revisit this topic shortly. But this is what we did in this entry. Now the next thing we are going to do, we are going to close all nominal account to the appropriate net asset. So here's what's going to happen. Here are some of the expenses that we incurred: public health education, 107,220, community service, management in general, and fundraising. We are going to credit those. We are going to debit first contribution without donor restriction. And if you're wondering where this number is coming from, it's transaction 1, 2, and 5. Those were the revenues, in quote, revenues without donor restriction. And the difference between those two gets close to net asset without donor restriction. Simply put, we had a loss. Simply put, this 98,050, in quote, a loss, in quote, it reduces, in quote, the equity, which is the net asset without donor restriction section of the balance sheet. Then we have to close the revenue that was with donor restriction, 193,000 in total, with donor restriction program, and time restriction 212,880. And in case you're wondering where these numbers are coming from, it's transaction 246, and we're going to close them to net asset with donor restriction. Here we have again. So hold on a second. What are the expenses for this entry? There are no expenses. Remember why there are no expenses? Because all these revenues are with donor restriction. They don't get expensed until they moved to the other side, to the other column on the statement of activities. Therefore, there are no expenses to close, no expenses here to close like in the first entry, like in this one, because we don't expense them until we move them from the restriction to without restriction. Now we have to close this entry when we move the revenue from with donor restriction to without donor restriction. So we're going to close each one of them separately. First, I'm going to close with donor restriction. So I'm going to close net asset satisfaction of purpose without donor restriction. Notice this was credited. Now we debit this account and we transfer it to net asset without donor restriction. Basically close it to the, in quote, the equity. This revenue gets close to equity. First, we transfer it. So like three things to do. First, we transfer it from with donor restriction to without donor restriction. Then we close this revenue separately. Then we close the other revenue. Then we have to close this one. Let me use a different color for the other revenue. Then we have to close this one because it was debited. Because it was debited, we are going to credit it and close it to net asset with donor restriction because we're removing it from those net asset. Therefore, net asset or the equity of the with donor restriction is being reduced. Therefore, it takes a debit. So notice three things. One thing is we move it from the with donor restriction to without donor restriction column. Done. Then we close each revenue separately. The revenue without donor restriction and the revenue with donor restriction. Now this is the statement of activities and we kind of covered this, but we'll look at it again. Again, we have two columns, without donor restriction, with donor restriction. Make sure you remember there are no expenses under with donor restriction, and sometimes this could be a tricky question. Tricky questions and a multiple choice questions. There's no expenses with donor restriction. And the other thing you have to know, what's the effect of this transfer on without donor restriction column? The effect is 0. Why the effect is 0? Because as we included it as revenue, we immediately included it as expense. Now, once again, I kept revenues and expenses the same. They don't have to be the same, but anything moved from with donor restriction to without donor restriction, it gets expensed immediately. It gets revenue, it gets recognized as revenue, and it gets recognized as an expense. So the net effect is 0. That's something else they test you on the CPA exam, or it could be a tricky question. The net effect on without donor contribution, 0. 0. Why? Revenue 10,000, expenses 10,000, the net effect is 0. Now let's take a look at the statement of financial position, which is aka balance sheet. We have the assets, we have the liabilities, assets, liabilities, and net asset. Where are net assets coming from? The 9,170 and 298,660. They're coming from the statement of activities. And I mentioned earlier that the statement of activities, yes, it's aka income statement, but also part of it, think of it as retained earnings, because it measures the changes, the increase in net asset, and it gives you the ending net asset, because the beginning was 0. Gives you the change, the beginning plus the ending. So it's an income statement, and this section here kind of the retained earnings, and the retained earnings from a traditional perspective is closed to the, not closed, it's listed on the balance sheet, and this is what I meant. These numbers are coming from the in quote statement of activities, and specifically within the what I called retained earnings section. At the end of the day, remember the community care, it's going to report expenses by program services and support services. This concept is important on the CPA exam. What should you do now? You want to go to Farhat Lectures, look at additional MCQs, resources that's going to help you, whether you are a CPA exam candidate, taking this course at a college level, or taking this for professional education or advanced your career. invest in yourself. Farhat Lectures is always here to help, and stay safe.